Do routine accounting tasks make you feel invisible? Then step up and earn your Certified Management Accountant certification. Become a CMA and you'll master the 12 most critical practice areas of management accounting. Skills that will make the routine tasks of accounting a thing of the past and strategic challenges a thing of the present. So step up, earn your CMA, and show you have the skills it takes to be seen and recognized. Discover how to become a CMA at cmacertification.org.
NFTs are making their rounds in the media cycle. Non-fungible tokens. What do they actually do? What does it mean, man? Is it that now GIFs are worth millions of dollars? What is the potential that it can bring to the table for the creator economy? I think there are many things to touch on in this space. So I'm interjecting the planned career episode to give you a deep dive into NFTs to allow you to understand what is going on, the technology behind it, the application behind it, and also, is this a potential latest investment tool out there today? All questions. Welcome to another Choose with TFC session. In this series, we hope to bring on interesting, relevant people to help us learn better from various perspectives. Life is not always about learning from people that you already agree with. Perspectives shape a rounder thinker. So in our pursuit of the life we love while managing our finances well, our guest today is a friend of mine that I met while running a podcast fellowship. He is really a cool guy, worked in multiple startups, big enthusiast in the crypto space, and I think he does a much better explanation than many others that I've seen as professionals of crypto. So let me welcome Mr. Reuben Noronha, ex-Zilingo, ex-Bain Co, now budding podcaster, crypto-enthusiast, and fun employed friend of mine. Have a good time. Welcome back. Could you just tell me what is an NFT? What is going on in this space?
What do you think an NFT is? Based on whatever you've read, why don't you describe to me what you think it is?
I mean, it is a tokenization process, right? Essentially, you're trying to make something that is not digital, give it a digital identity.
Yeah.
And then whoever that owns that digital identity actually owns that physical thing, and that's it.
Somebody who owns the digital identity owns the physical thing.
Yeah. So to me, it's like a smart certification process. I don't know. Is that what it is?
In some light. One aspect of it.
Somehow there.
One
right?
aspect of it,
okay.
yes.
Tell me more.
And just so that I understand where you are at right now, why do you think it's a craze?
I don't know, man. Everything is a craze these days. Like GameStop and then NFT and then whatnot. So everything is a craze. I don't know why it's so big. Yeah.
Okay. So let's maybe start at the problem the NFT is trying to solve. So let me first describe to you what the problem in the world today is.
What is the problem? Okay.
And then we can describe how NFT is one of the ways to solve it, and why it is a superior way to solve it. So NFT is non-fungible token. The biggest way it's different from tokens, or say an ERC20 token, or say Bitcoin, right, or money, is and which is why it's highly interlinked with the entire crypto and blockchain world. If you take $2 notes, they're fungible. They both can be changed with each other. You take two, arguably, Bitcoins. It's not a real thing, but you take two Bitcoins, it's fungible. You can change them. A non-fungible token essentially has the same properties with, say, what a Bitcoin would have, but you can't swap it out with something else. So it's unique. So that's one part about it, why non-fungibility is important. You can't swap it out with something else.
Okay.
But it has all the properties of what a token would have. That means it lives on the blockchain. It has public ledger. Everybody sort of unanimously agrees that the owner of a token is the owner of that token. And all the benefits of Bitcoin or any token NFTs enjoy. They're built essentially mostly on top of Ethereum, but they're non-fungible. So two tokens are not the same.
Okay.
Or you can create that. But NFTs, you'll see, have sort of grown the most is in the digital art and the creative sort of space. And it makes sense why. So if you think of a digital artist, he makes an art form. He makes literally basically a JPEG, right?
Like a GIF.
Like a GIF, correct. Like a GIF. And that doesn't have much value. Now, why does it not have value? It doesn't have value because it is not scarce. Anything of value needs to be scarce. It needs to be limited. If there's unlimited amounts of it, it loses value. Now, the internet and everything digital was essentially built on the premise that everything can be copied billions of times. Information can be taken from one place and be copied with literally 3 clicks. Control C, Control V. That's it.
Yeah.
Everything can be copied, right? And that was the power of the internet. You could make millions and millions of copies and essentially make this available to the world. That was the promise of the internet. But what that created was all of this information which could be copied and pasted did not have scarcity. And inherently it wasn't valuable. Now, if you're a digital artist and you're building something in the digital world, just like everything else in the digital world, it can be copied and pasted. And as a result, there's no scarcity. And as a result, it doesn't have value. So how does a digital artist create scarcity in a digital first world? And NFT sort of solves that problem. What NFTs are able to do is, even though this is a digital copy, it can it can essentially say that these are the original copies and these are the copies of the original. And because you can identify, and there's consensus across the world because it's a public ledger, that this is actually the copy, that is scarce now and that has value. Now, a common argument which comes against this is everybody can see it. So why is it valuable? Well, you know what? You can apply the same argument to art in a museum. Everybody in the museum can see it. So why is it valuable? So it's the same argument.
Yeah.
Just because you can see it doesn't mean you own it, number one. And there's value to ownership. So that's one aspect to what you said, a smart certification. It sort of is a smart way to be like, hey, that piece of art is scarce. You can create scarcity in the digital world. And you can sort of authenticate publicly that this person owns it. So that's one part why NFTs are interesting. Now, the second problem in art, and this is not only digital, but any format or any creative piece, the creation and the distribution are two separate sort of worlds. An artist paints a painting, a musician makes a song, and then a label or a gallery will essentially distribute it. Now, it's common knowledge that as this piece of creation moves from hand to hand, its value usually appreciates if it's good.
Yes.
And it sometimes appreciates by a magnitude of like exponentially. But in the current economic format, in the current economic world, the creator actually does not get any % of the upside. So when a song is released, the musician mostly does not get the most of, he gets royalties, but to enforce royalties again is quite hard. The artist does not get any cut from secondary sales. So the economic model is a bit flawed because it's the collector and the middlemen who are essentially, making most of the upside. Now, what NFTs can solve for, or at least like smart contracts, what they can solve for is that every time you can essentially program it in the NFT, that every time it changes hands, every time the ownership goes from one person to another person at a whatever transaction price, X% of it will automatically get, sent to the creator, the original creator of that product. And what that solves for is, you can essentially you can program in a royalty system which doesn't have to be enforced by anybody. Nobody's going to be pulling up anybody else for copyrights. You use my song, boom, automatically I get royalties.
Nice.
It's completely programmed in.
Yes.
So that's another big value prop for artists. In fact, anybody who creates something and they feel that they do not get the value of it as it goes down the supply chain or it goes down the value chain can now program it into there. I think that a big use case of this is even products, physical products. Think of the factory who makes a garment and think of Zara who sells it. Or forget Zara, say Balenciaga who sells it.
Forget Zara.
Zara sells it cheap. Or the guys who make the Supreme t-shirts, right?
Okay.
Yeah, Supreme has an immense amount of brand, but imagine the guy who manufactures it. He's like, what the hell, man? This is why I would just go and make Nike copies. You can solve that problem by saying that, hey, everybody programmatically, nobody has to enforce it, gets a piece of it. Now, it's very easy to implement in digital because it's digital first, but I see a big use case of this eventually happening in the physical world. Because the physical world, what today tells you that you own a piece of art, you own a piece of product, is basically a paper certificate.
Yeah.
That will become irrelevant. You will have to own the NFT or you will have to own the token of it to actually say I own it. And yeah, maybe you can take my painting, but if you can't show proof that you have the NFT, you can almost imagine like jurisdiction coming down and be like, okay, show me proof that you own it and you didn't steal it. If you can't show them the NFT, it's stolen. You take it back to the NFT owner. And every time the NFT switches owners, a percentage of it automatically gets wired to the creator.
Okay.
So that's another big value add, what NFTs can potentially solve for. Now, on the third, think of creators, right? And compare them to startups. What startups do today is they raise a lot of venture capital. And what venture capital helps for, if you think about how venture capital was set up, it was mainly set up to help build SaaS companies. Because SaaS companies needed a lot of upfront investment. And then once you created that, every additional user who was using that product, the marginal cost of it was zero.
Yes.
But the marginal revenue was high.
Yes.
Now think of media. It's exactly the same. We produce this podcast. There's a cost to produce this podcast. But for a marginal user, for every new user to listen to it, the cost is zero.
Yes.
That means a business like content creation or any kind of creation can be compared to a SaaS business.
Yeah.
And then what does VC for SaaS look like? What does VC for creator look like? It's a bit of a question mark. Now, a lot of guys in the world today are going and setting up companies, and then they're raising equity, very similar to a startup. But an alternative way to finance all of that is you issue an NFT. How would that work? You issue an NFT, and this gets really exciting. You issue an NFT saying that, hey, I'm going to be producing 10 pieces of art, and I'm doing a pre-sale. I don't know what art I'm going to make, but I'm going to sell these 10 NFTs. And if you own an NFT at the end of this process, you can redeem that for a piece of art. So I do the sale and I sell it in the open market. It's almost like VCs coming in being like, I want a piece of that, I want a piece of that. Now we'll come into the challenges. Do you require a community? You can't just be, bluffing away like what most ICOs did, right? ICOs proved that you could raise a lot of money, but they also proved that a lot of random people could just raise money on false promises. So
why is this different then?
It's not actually very different from the ICO challenge. So people raising money with NFTs for something they have to produce in the future is very similar to an ICO. So it's not that different. But yeah, I think the ICO is sort of like, for the sake of argument, I think it's very, very similar. It's not too different.
Yeah. Okay.
So think of actually a good way to think about it is think of the NFT as a SPAC.
That was what was going through my mind. It's like a SPAC, it's like a venture fund, it's like a...
Exactly. You have a shell NFT, it's valued as something because that creator is going to actually put something into it. And you have some trust that creator is going to create something of value. But basically you own the SPAC. The NFT represents the SPAC. The ICO sort of represented a share into something in the future. Maybe that's some kind of a difference. Because you won't issue 100,000 NFTs. You would maybe issue one NFT. Whereas an ICO, you probably issue thousands of tokens. But anyway, forget about the difference. But it's similar, but slightly different. So you're a creator. You sell these NFTs. It requires immense amount of trust from your community that it's actually going to be valuable. But you put them out. You get in cash. People buy your NFT. And then you can start creating whatever you create. So it solves for that. Like a lot of creators can essentially crowd fund whatever they're making. But here's where it gets really exciting and where it gets very different from crowdfunding. Whatever I just said sounded exactly like crowdfunding.
Yeah, it does.
When I essentially buy something, be a part of or I fund something on Kickstarter, I've essentially put in my money for the actual outcome of that project.
Yeah.
My ownership into that project is highly illiquid, but that doesn't happen with NFTs. If I've essentially say Reggie raises 10 NFTs, right, for the next 10 podcasts, I bought it. But at any point between today when I bought the NFT to when Reggie actually puts out his episodes, I can sell my NFT. So that almost becomes a financial asset. And here's where it gets even more interesting. Every time that NFT changes hands, remember what I said? The artist actually gets a cut. So I can theoretically sell all my NFTs today at $10 before making any art. I can launch one piece of art, which people are like, wow, this is epic. It's worth $1 million. All my 9 NFTs start trading for higher. And every time they trade, I get a percent of it. So it's like basically an IPO.
Yeah.
But you actually get an upside as your share price goes up. When most companies IPO, which is why the big question on what price do you IPO, if you price it too low, you leave money on the table. If you price it too high,
Nobody wants
it. So it's like getting the right price is so hard. But in this kind of format, and again, it's not purely NFT. I'm sure it can apply to companies raising money also. It's okay. You can price it whatever you want, because as it goes up, you're sort of getting the upside. So, like, it lowers the barrier for enthusiasts to participate in a creator, finance them. And if things are not going too well, sell their stake off. Be like, Reggie, I think you're going to produce 100 podcasts. You, whatever, sold 100 NFTs. I bought it. I was excited. But 2 weeks later, I'm like, oh man, I don't know if Reggie's into it. Or my conviction goes down. I have a market where I can sell that NFT. I can't do this in crowdfunding, and which is why the big difference in crowdfunding.
Yeah.
But here's the flip. If the value of it actually goes up, if you get a lot of traction, oversubscribed on a crowdfunding platform, you are actually economically incentivized, because if I sell it to somebody else, there's a way that you actually get a cut on every increment which goes up. So it's essentially, it all boils down to the NFT is essentially an economic model which is very, very pro the creator. And it allows the creator to essentially dip into all the areas where his art was actually creating value and sort of, extract value from all those, even if it's very far away from that person.
Yeah. So that's the creator part, right?
So
and then as an investor or as someone that is trying to, explore this thing as a financial asset, right?
Yeah.
And what is my reality then? Like, how do I pick NFTs, and how does that work? How are they priced?
Yeah, that's a great question. So think about the financial assets you're currently invested in. What would they look like?
I mean, stocks, ETFs, bonds.
Exactly.
All right. There's a market to exchange out there and those kind of stuff. Yeah.
Correct. So you own stocks, you own bonds. Say you own Tesla, right?
I don't.
Forget the Tesla. what stock do you own?
I mean, Apple, Facebook,
Say you own Apple,
Disney,
right?
whatnot. Yeah.
Say you own Apple. Now, you might actually understand Apple's business. You might actually understand Apple's balance sheet. You might actually understand what happens on Apple's, investor calls. My guess is at least 50% of the people who own Apple don't understand that.
Okay. Really?
I think so.
Okay. I don't know.
Like, they don't really understand, like, they probably don't know how to read a balance sheet.
Okay.
They won't know what a good debt to equity ratio should be. They won't know it. And as you sort of look at the entire market of investors, especially like not professional, like people in the business of investing, but like retail investors, my guess is most people don't really understand the financial product that well.
Fair. Anecdotal experience tells me, yeah, probably. Yes.
Yeah. Like, I think a handful of them people actually understand. Like, yeah, I can say, I own, say, Spotify. Why do I own Spotify? Because I'm a happy user of the product. I pay for them, and that's it. Now, the real question is, I buy Spotify stock. Is it at the right price? I have no clue. I have no clue if Spotify is overvalued, undervalued. I want to own it because I like the product. But from a pure financial price, I have no clue. Anyway, the point is that my view is that a lot of people who buy stocks, bonds, they get a broad feel of it. They don't really understand it.
Yeah.
So it begs the question on, hey, we should be investing in things we actually understand. And what I feel as a new asset class will emerge is basically investing in businesses you actually understand, which are creators. If you are essentially, watching, say I DJ, right? I watch this DJ putting up YouTube videos. I am, better than the average individual to assess if the guy is talking shit or if the guy is talking sense. So I understand that better than most other people. It gives me a competitive edge. Number two is if that guy actually sells, say, like a course, or actually sells an event or sells like a masterclass, I'm probably going to buy it. That means I'm putting my sort of, I'm paying for that product. That means proves to me that, hey, this guy's probably doing something interesting. As a fan of, say, musicians, I'm anyway promoting them. What if I could get financially rewarded for it? So at a macro, I feel creators as an asset class is going to start becoming a thing. Just like we have baskets, you'll probably have, Korean beauty, a basket. You want to invest in Korean beauty, you can invest in this ETF. Because like thinking of creators as like just purely guys who make videos and content is quite limiting. You need to think of them as media companies. So NFTs sort of become a new vehicle, like a stock, to invest into new age media companies. And that's why from an investor's point of view, if you're bullish on like, meditation is a thing, You might want to invest in a meditation app. You might want to invest in clinics, in yoga companies, or you might want to invest in a basket of creators who talk about meditation online.
Okay, that's interesting. That's interesting.
So yeah, I feel on the other end of the spectrum, and I didn't mention this earlier, is creators as an asset class is something which will be a new asset class, like an alternative asset class. Like everything else, like like sneakers are sort of becoming, collectibles are becoming an asset class. Art is an asset class. All of that. I feel like investing in creators, which are like new age media companies, in my opinion, will be an asset class. And the way you invest in them is probably not through stocks. Creators don't want to set up a company and dilute stock, and it's too painful. They would probably do it through NFTs.
Okay, so trying to help me understand this, right? So when we run something in a stock structure, there's a company and then there's cash flow, and when you own the stock, you're actually owning a part of the company, and then if they pay out dividend, you get that cash flow, right?
Correct.
And if the value of the company goes up, then your stock price go up. You get that experience, right?
Yeah.
How would that translate then into an NFT?
Yeah.
Right. When it is just an individual, like, are we getting a bunch of their cash flow or what's going on, right? Because it sounds like it's so flexible. Like you can essentially create tokens for the singer itself or their songs or their future project. What's going on here? Like how does that work then?
Yeah, that's a great question. So let me break this into two parts. Number one is, how do you actually get access to potential cash flows and dividends? That's one. Actually, three parts. So that's one. We'll come to that. The second is, how does the price go up because you gain through appreciation? That's two. And the third is, how do you actually enforce it, which I think is a very important one, which is phase 3. So let's maybe deal with phase 3. Today, if a company makes a lot of profit, it's at the beck and call of the company to announce dividends or not. Yeah, you can arguably say the shareholder vote can be like, okay, we vote for dividend, la la la. But as a retail investor, I don't know if this company is going to announce dividends or not.
Yeah.
That can be avoided because with NFTs, what is possible is it can be programmatically written that this is what's going to be the dividend payout if XYZ criteria are met. You can almost like put it into code, make it publicly available. And if everybody's like, that makes sense to me, I buy in. That doesn't make sense to me, I don't buy in.
Okay.
So like payouts, if the person who's you investing in actually does well, assuring your payout can be guaranteed to a larger extent as compared to a women fancy of a board of investors and shareholder, which can be moved around. So that's a quick one. And it gets super important because if you're not investing in like an equity, right, a stock, who's enforcing your ownership? How do you prove your ownership? How do you essentially say, hey, give me dividend?
Yeah, that's actually one of my bigger concerns in the crypto space, right? It's like you don't actually own the company. You're not actually like, you don't own the technology. You're just kind of putting your resources here, and then like who and how does this work, right? So I think a lot of people have these kind of concerns.
Yeah, and they're very valid because we are used to a system wherein the rule of law of the country will come down and enforce on it, right?
Yeah.
Anything, like if I give you money and you like, whatever, legal tender means you're not allowed, like if I give you $10, you're not allowed to say that, hey, I'm not going to give me $10, give me something else. So we all essentially go up to the rule of law to enforce it. But like at least in countries like India, for example, you're like, really? Is that a good assumption?
Really? Mm-hmm.
Rule of law? I don't know. So yeah, it's a big question of how much you trust. Like for example, in Singapore, rule of law, we had, right? You're pretty confident of that. But in a lot of places, you're a bit of a doubt. Like, will rule of law actually...
Especially when it's so huge, right? Like, you're in like all these different parts, like what's going on. So,
and especially when it comes to like corporate, you're just like, like, will anybody listen to a small guy? They'll bring in the attorneys, they'll fight. And, I don't know, right?
Yeah.
So you can just think about all of that. There's no rule of law. There's contracts. You buy in or buy out. And if it's in the code, if it's in the contract, if it's in that smart contract, you can assume that it's going to happen because it's not going to be determined by somebody. If X, Y, and Z conditions are met, it's going to happen.
Okay.
So that
is the thing with NFTs.
With just blockchain
with
in general.
Blockchain in general, right?
Not in blockchain, but like smart contracts.
Okay.
That if this happens, you can assume that output is going to happen.
Okay.
Because a computer is deciding.
It's programmed to do that, right?
It's programmed to do
No
that.
discussion on that.
No discussion. This is what they call programmable money. Like
Okay.
you can program the money to do things if something's happen.
Nice.
And there's no ambiguity.
Nice. Okay, cool.
So that's the enforcement part, which it becomes important because today if I want to, finance Reggie, what if Reggie fucking fucks off tomorrow, right?
Yeah.
Like, I don't own Reggie's company. And even if I own Reggie's company, Reggie's like, yeah, okay, own the company.
Yeah, by all means, do your thing.
I'm a creator. I'll start up a new company.
Yeah,
so it gets harder in the creative space.
Okay. I'm slowly seeing it.
Because the IP is all the creator.
Yes.
It's not the company's operations and clients and things like that.
Yeah.
So the company structure probably is not the smartest, but you have to find other ways to do it. So anyway, that's one. So let's come to the first one. How do you get dividends? Now, again, it comes back to how you program the NFT. There's this platform which is, I think, called Hive. And the way to think about it is it's a decentralized YouTube. For all practical purposes, it's YouTube.
Okay.
There's no real organization who runs it. How they decide, ad splits and how much percentages creators take, is all decentralized and is not run by a company.
Okay.
Not programmed. So what happens in, say, for example, Hive, and again, I'm not sure if this is exactly true, but in essence, what happens is I can show up to Hive and I can watch videos. Every time I watch a video or every time I listen to, a podcast from Reggie gets a coin. Say the Hive coin. Okay? Now, that Hive coin, because it's the crypto world, can essentially be traded out into anything. So that's of value to you. It's not like just getting a digital coin on some platform. You can trade that coin. Because who buys those coins are advertisers. If an advertiser wants to put in an ad into your show or in any show which airs on Hive, you would essentially need to buy a coin or whatever. So in the economic model, it works there. Now, what is possible is your NFT can say, every time Reggie gets one Hive coin, I get 1/100th of it. So every time Hive is pushing a coin to Reggie, the NFT can say, when that transaction happens, I essentially get 1/100th of that coin. Because the good thing about coins is you can essentially fractionalize them.
Yeah, you can fraction.
To any extent. So every time Reggie gets a payout from anywhere, you can program the NFT and Reggie will say, hey, here's my NFT. This is what it means. Every time I get paid out from YouTube, or every time I get paid out from this company, you will get X% share of it. And it doesn't even matter if I want to give it to you or not. It's programmed.
Okay.
Now, this unlikely happens on YouTube because YouTube will have to sort of API sync into all of that. It's complicated.
Yes.
Theoretically, it can happen. Theoretically, it can. Like if I can plug into your YouTube AdSense, you can do it.
Fair.
There's a cool company called Stir, which sort of does split payments.
Stir,
STIR,
okay.
Which does sort of split payments for creators. So say you and I collaborate and say this airs on your show and say you make $1 million on the show. I'm like, we'll have to have a legal contract and stuff like that. But what you could also do is, hey, here's the show, whatever ad revenue comes in to your YouTube account or whatever account, say 20% automatically gets wired to me. We don't have to enforce it.
Nice.
So that's what an NFT
That means
can
I no
create.
longer need to write legal contracts.
You never write legal. Because here's the thing. Who was enforcing the legal contract? The law. Here you don't care about the law. The contract enforces
The
itself.
program does it, right?
It just enforces itself.
Nice. Okay, I'm seeing this clearer and clearer. So that's good. That's good. Good stuff.
And by the way, there's a flip side. Because if you don't understand the law, if you don't understand the contract well, nobody can protect you. Which is why, for example, people have lost
Yeah, there are a
billions
lot of
of Bitcoin.
scams out there on this kind of
You
stuff.
have to be very careful.
Yeah.
Because if somebody sells you something wrong and you don't fully understand it, I'm sorry, you can't go crying to somebody and be like, oh, I didn't understand.
Yeah,
So
because this is the contract, right?
This is the contract. You signed it. And there's no resolution per se.
Yeah.
And that is why I feel a lot of people are slightly nervous because you can't make a mistake in this world. You send the money to the wrong guy, you can't be like, oh, I'm sorry, I sent the money to you, please give it to me back.
No, does not work that way.
You can't. Why did you make the mistake in the first place? Now, I think there's a lot going to happen on the consumer side to improve this experience, but that is what it is. If you say somehow you fucked up and you said, Reuben, you get 1% of my earnings as an NFT, that's it. By contract, I can do that. And it automatically executes. And you might be pulling your hair like a lot of startup founders do eventually when they dilute too much. Why did I do it? But you can't reverse that. You can probably, find ways to, you can buy the NFT back and then kill it and whatever.
all this kind of stuff.
You have to be very careful on what you sign up for. But the good thing is, what you say will happen. No two ways about it.
No, okay, I briefly get it. Okay, so it's kind of like if I NFT one podcast episode.
Yeah.
And then I say that you will get 5% of all my ad revenue that goes through this particular episode.
Correct.
And so if someone buys that ad slot, you automatically get 5% because
Absolutely.
you own an NFT of this particular episode.
Absolutely.
Is that what it is?
100%.
Okay. Nice.
So, for example, if I listen to this episode and I'm like the first 100th listener, and I'm like, man, this episode's gonna be dope.
yeah.
I'm gonna buy that episode.
Okay. By the way, shout out to you guys. If you want to buy like coconut NFTs,
100%.
yeah, let me know, man.
If you want to buy, like, clearly Financial Coconut is a big podcast.
Thank you.
It's a big podcast. Here's the thing: you should try and sell your first episode. That's what I tell a lot of podcasters.
Yeah.
Why did you ask your audience if they would like to own the very first episode you did?
Nice.
Now, how valuable is it? To be honest, I have no clue. But would you pay $1 for it? Maybe. Would you pay $2? That's less than a bubble tea. Maybe. It's a way for you to source up like Reggie's support.
Yeah. It's
But-
kind of like experimental, right? At this moment in
Experimental.
time.
But here's the thing: what's possible? People eventually realized that his art was worth $69 million. I don't think he would have imagined that.
You mean that GIF guy?
The guy who put those 50 paintings. Because somebody else placed some value on it. So anyway, like the thing is, the price discovery of content is very hard. What is your first podcast valued at? I don't know. But put it out to the open market and we'll find the value for it.
Okay.
So that's what I also NFT solve for. By really creating an open market, it helps artists extract the most value.
So what are some of these
artist.
platforms that I can go to like buy NFTs or explore what is out there?
So you can go to this platform called OpenSea.
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 SEA?
SEA.
Okay, OpenSea.
Yeah,
Okay.
that's a platform where you can mint an NFT. And what that means is you essentially say that this file and the metadata of this podcast, you sort of mint it into a token. And that token says, okay, this is a unique token which has this metadata, which is your podcast. And that's it. This is owned by this address, which is Reggie's address. If you want to buy it, you can sort of bid on that platform. And then Reggie can sell you that, which means you transfer Reggie some cash. And then Reggie sends you that address. It's logged on the blockchain. Everybody agrees that now the owner of that token, which contains the metadata of the first podcast, is owned by that address.
Nice.
So OpenSea is one. You can pretty much tokenize anything, right? Like Jack Dorsey tokenized his first tweet. Now, why would anybody want to own the first tweet? Well, it's like owning a piece of history, right?
Yeah, fair.
It depends.
I
Is
know.
it worth 2.5 million? I wouldn't pay 2.5 million.
Nope. I don't care about Jack Dorsey.
Exactly.
But yeah, I know fans like Batman, Superman, people buy those things, right?
Correct.
But those will then fall into the very, collector class, of
Collector.
assets. And it's a very different discussion, But at least through this discussion, we have come to understand more about like, how do we then, kind of tokenize these things and find cash flow in this process?
Yeah.
Right? And then once you have cash flow in some asset,
Yeah.
then there is some sort of way to calculate,
Yeah.
its actual value in
Yeah.
that sense. Yeah.
Correct. Because another great thing is, say, for example, even music, right? You can completely get rid of, copyrights. Because you're like, here's this music. Anybody in the world can use it for whatever they want.
Dude, tell me about it. Yeah.
But you can take this music and plug it into, again, all of this probably needs to happen in a crypto first world for all of these contracts to execute automatically. But I can take a song, put it into my video, and the song will automatically, now how this works is, I'll avoid it, but the song can literally say that, hey, if you want to use me, I'm going to get 5% of whatever the bigger content gets. Okay, I'll go into this video. If this video gets X amount of ad revenue, the song per se will automatically extract, 5% of that video.
Yeah, I get it. It's like you run a mini movie and then like you can use my hit song as like your theme song of your mini movie,
Yeah.
right? And for every ticket that you sell for $10,
I get a
I get a
piece.
buck or something like that.
Exactly.
And then we're locked in on a smart contract.
Correct.
Feel free to use the music. Right?
Exactly. Feel free. As long as I can enforce the contract, and here the thing is, it automatically executes. So what NFTs actually will eventually become is not collectible. Like today, people are looking at collectibles.
Yeah.
They'll actually be income earning assets.
Nice.
Like I'll own Reggie's first podcast, not because I want to collect it, because everybody, as Reggie grows as a podcaster, everybody will want to listen to this first podcast. How did Reggie start? And the more people listen to it,
The more ad revenue?
ad revenue, the more money I make.
Nice.
So, if there's some person who should be like, okay, I'm putting together a list of the top 100 first time episodes. If Reggie's podcast lands up on that list and that entire show makes him a lot of money, I still make more money.
So that becomes a structured product.
So it becomes a
of
structured
NFT.
product. Yeah, it becomes today people can see it as true ownership and a collectible. Yes, absolutely. But people already, I'm not the first one saying this, but you can see this as an income generating asset in the future.
Shit, bro. Wow. Okay. Wow. That's amazing. Honestly, the way you've explained it.
Yeah.
I was like, wow, I'm so blown. And shout out to everyone listening. And if you want to own a coconut NFT, we'll explore. Okay, yeah.
Why don't we start a new podcast called Financial Coconut Crypto, and then you can own the first one of that.
Okay. Let's think about it. Okay, recently there's been a lot of buzz in this space.
Yeah.
So yeah, let's see what that goes. Thank you. Thanks for sharing. I think
problem.
it's amazing. Hey, I hope you learned something useful today and truly appreciate that you took time off to better your life with the Financial Coconut. Knowledge is that much more powerful and interesting when shared, debated, and discussed. Join our community Telegram group, follow us on our social, sign up for our weekly newsletter. Everything is in the description below. And if you love us, want to help us grow, definitely share the podcast with your friends and on your socials. Also, if you have some interesting thoughts to share or know someone that you want to hear more from, reach out to us through hello@thefinancialcoconut.com. With that, have a great day ahead. Stay tuned next week and always remember, personal finance can be chill, clear, and sustainable for all. I'm just going to go to 3 short questions with you. Just share with me your thoughts. Okay. So number 1 is, what is a core life principle that you hold close to?
Just try things. Don't be afraid to try things. It's very hard. It's very scary. But what I've been hearing time and time again is that when people are very, very close to dying, the biggest thing they have is regret of not doing things. And yeah, that's something I think hold. It's very important just to try it out. Get it out of your system. Do it. Try it. What's the worst? You'll fail at it, right? It's not even a bad thing. You learn something out of it. So yeah, I think that's an important principle I hold. Don't be in a spot wherein years later, I wish I did that. It's not that I feel that today, but I've heard so many stories of people later in life just being regret is the worst feeling. And I don't feel regret today, but I'm so scared to what that feeling would feel.
I know.
Because then you're man, I'm 60. And even at that point in time, I don't think it's too late.
And I'm still a virgin. No.
But I'm oh man, 20 more years and I'm gone. And you always think you'll do this tomorrow, you'll do this tomorrow. And then when you hear instances that, whatever, somebody died or somebody got a heart attack at 30 and you're man,
I get that. Cool.
So yeah, I
no
think that's
regrets. Good.
No regrets.
Okay, next question. So what is a personal finance advice that you feel needs to be propagated?
If your full-time job is not a trader, don't behave like one.
Nice. Don't try to time it.
Don't try to time it. Yes, people around you will make a lot of money, but nobody's going to tell you how. I wish there was how much people lost.
You wish there was an NFT for their portfolio performance.
Yeah, by the way, that's another thing people will do. They just issue an NFT for themselves and you'll be hey, you get a cut on every trade I do.
Yeah,
it's a great way for a hedge fund guy to raise money.
Yeah, great shit, man. Application. I'm sensing all these things.
Yeah,
nice.
but yeah, don't behave like a trader. You will probably just lose. Just because you have the ability to buy and sell every single day doesn't mean you need to do it.
Nice, got it. Cool. Last question. What is something that you're working on now, extra focus on in your life?
Oh, figuring out what I want to do next. I wish I was working on something more concrete, but I'm trying to figure out what I want to do next, which is broadly in the space of crypto, creator monetization, higher education, but also work on my own podcast. It's called Reuben's Podcast.
Yeah, cool stuff. Check it out.
Yeah.
Have fun with Reuben and friends.
And I talk to people about their lives over the last 10 years and the things they've learned. So it's interesting. I start off doing it with my friends, but let's see where it goes.
Nice. Thank you. Maybe we'll do the crypto podcast.
Yeah, we should.
Let's talk about this after this. Okay. Take care, guys. See ya.
Do routine accounting tasks make you feel invisible? Then step up and earn your certified management accountant certification. Become a CMA and you'll master the 12 most critical practice areas of management accounting. skills that will make the routine tasks of accounting a thing of the past, and strategic challenges a thing of the present. So step up, earn your CMA, and show you have the skills it takes to be seen and recognized. Discover how to become a CMA at cmacertification.org.